Hello guys, welcome back to another Lumley trading video. In this one we're going to be analysing Heart Test Laboratories, so ticker HSCS, because today is one of the leading gappers, being up 150% as we're recording this, which is about 2 PM market time. So to get straight into the technical analysis, obviously on the left we have a 6-month, on the right we have the 1 year. We're going to be using our standard deviation channels as we do with all our technical videos. So what are we looking at? What do we expect to be key resistances going on the way up and also supports on the way down? So as you can see, we do, and kind of where we started to get some hesitation is our second deviation on the 1 year. 225 and 240, both of these are second deviation, one on the 6 month, one on the 1 year. We can see basically as soon as we came into this level, the first time we hit it, we got the pullback. We came into the second one, we got the pullback. And like we say in all these videos, again, you can go and watch all of them. What do we look for at these levels? The first time you hit them, you're looking for the pullback. Once you're in the money, what I tend to do is move my stop to break even, lock in some profits, because really I'm looking to play the overall reversal. So that's where you can look to make some money. These can be more of a scalp, a short, 1 to 10 or usually 1 to 1 hour trade. 1 minute to 1 hour trade, and that's just playing the pullback. So again, looking in some profits on the way down, moving our stop to break even. So if we had any size left, cool, we get stopped out of that here. Not the end of the world, because then we're getting in with our second size here at 239. Again, all we'd be doing is hitting that short, locking in profits along the way. Once we're in the money, obviously break even stop, so around 240 stop, we can see we'd still be in the money. We definitely would have been locking in money along this trade, and on stocks like this they tend to be more day trades. You can see we would have been 22% in the money at the peak. So on these kind of pullbacks, obviously, and these kind of stocks, they're just going to tend to be day trades, because if we go over to the option chain, obviously there is none, so we can't really hedge this overnight. A lot of risk to short something like this overnight, so they tend to be day trades, and really that means we're more just looking at the pullback opportunity. And you can see there is so much potential gains, because don't forget as well, on these stops, let's say you have a 5 to 10 cent stop, which is kind of all you really need on these stocks. If it doesn't work right away, it's probably not going to work. But you could be looking for 25 cents plus on these kind of trades. So definitely a lot of opportunity there. And that's kind of just to show you the power of these levels. So if we do end up breaking or retesting and breaking above these, then the next two levels we're paying attention to is $2.82 and $3. And if we break through those, $3.58 and $3.40. Again, we're just looking for the same trade plan on these if it did continue up. Again, it can be a bit harder catching these shorts, and that's why we also go through a long buy strategy as well, because obviously on some brokers, and again even on some brokers, it can be very expensive. Are there shares available to short? If there isn't, obviously, then you can't even trade it short. And if there is shares available, how expensive is it? Is it worth the risk to reward? But if you do want a long buy strategy, so then obviously the short locates aren't going to matter. It's again using the same deviation, so 175 to around 166. These are our first deviations. So really the way we're looking to use it is once we come back to these levels, again, this is where we start to expect bounces. You can see by here it missed by about 3 cents. So again, you're always going to be watching this, saying, oh, do you maybe get in a bit early? Or again, here you can see you kind of got that double bottom right by that deviation. Again, sometimes you're not going to get that pinpoint accuracy, because that's always going to be hard, but you can see missing by 3 cents, definitely the opportunity is there. And watch for the first time it hits it to the cent, you'll probably get that same bounce. So again, basically the same strategy, whether these levels are to the up or downside. The first time you hit them to the upside, you're looking to play the pullback. The first time you hit them to the downside, you're looking to play the pullback. So again, they can provide a lot of day trading opportunities, whether you're only a short bias trader, whether you're only a long bias trader, or you trade both. If we do break through that 166, kind of the final levels I'd be looking to trade down to are 118 to 108. After that, it's basically near its gap fill location around 88 cents, and really that is more fair value around 120. So it just doesn't really make sense, and there isn't as much edge opening up new positions coming into this level. So I hope you enjoyed the breakdown on HSCS. If you did want to drop a like and subscribe, and check out this analysis video.